So we're glad to have Mark Zukerman from Centennial, a non-bank lender, with us today. And I'll go ahead and turn it over to you. Mark, can you give us a little bit of an introduction for you and then a little bit of an introduction for Centennial?
Yeah, thanks, CT. Look, I'm Mark Zukerman. I'm the head of lending at Centennial, or we call it CPG. We're a boutique funds manager. My background, I've been lending, corporate banking and lending for probably 30 years now. It's a large number. It scares me, but it is actually around the 30-year mark I've been in the industry. I've been with Centennial just over 2 years. I came across from another really good non-bank lender and joined the Centennial Property Group to start up their commercial lending activities. Prior to that, the group they were in real estate, but they were property syndicators, property developers. They joint venture with other developers. They provide private equity, mezz finance, etc. But we saw a gap in that non-bank space, and with the real estate background the group have got, and the key guys that are behind the business, the principals, all with a focus on real estate, it just seemed a good fit to start that lending business.
Okay. Well, and that's a really good segue into my next question, which is, what do you think sets you guys apart from other lenders? I mean, what sort of makes you unique, or what do you think is your
Yeah.
advantage in the market?
Yeah. Look, we, as a non-lender, I guess we do get caught up with the reputation that the old non-bank lenders had of being quite predatory. Thankfully, that whole side of the industry has changed. We fill an important role in the market. Where do we see ourselves within that subset of the market? Well, look, we like construction. We're good with construction. We like the bridging finance loan. We're not the set and forget type of lender. If a client is looking for a exquisite interest rate and they're going to set the loan for 5 years, that's probably not us. Our cost of capital is just a little bit higher, and we find that we can deploy that capital, put it to good use in construction loans where perhaps they don't meet the criteria of the banks. We've got maybe pre-sale coverage at 20 to 50%. We've got an owner builder. We've got maybe even a new developer who's come across. They've got experience overseas, or they might not have experience at all, but they've got a cracking site. They've got good equity. We'll look at those transactions. We'll make sure that they've got a great team of experienced people to deliver the project. But we won't just stand back and say, look, no experience, we're not interested. So we're a little bit more commercial, I guess, in the banks. I know that's bandied about a lot, but we're not prolific lenders. It's not a case that we want to set 3 and 5 loans every month. Really, no, we pick and choose. If we see a good transaction and we like the people behind it, then we'll go hard. We'll back them. So in terms of separation from the others, there are good players out there as well. We're not alone in that space. The 10 to 30 mil mark, the pre-sales less than 100% debt coverage, the owner builder, limited experience, those kind of transactions are what we look for.
Yeah.
Non-income generating properties, we're happy to capitalize interest until it gets to a point where they will refinance it with a bank lender at an investment rate.
So that's a good description of where you guys sit, and that's a very clear kind of set of differentiators. Give me maybe an example of the kind of deal that you think you're best at. Like, if you think about some of the stuff that you've done recently, is there one that jumps out and says, yeah, this is shows the kind of stuff that we can really do and that we're really good at?
Yeah. Back in late 18, we came across a cracking transaction. It's in Sans Souci, close to the bay in Botany.
Yep.
95 unit development, good location. The product fitted the demographic, which was great. The price point was good for that area. It ticked all the boxes. We've got transport, we've got employment, we've got amenity. But what we had was a situation where 2 partners came together. One partner had no experience whatsoever in property. They were consumer business, great people, cracking, good-hearted, good people, good, successful people in their area. And the other partner had a legal background, but with reasonable, construction and development experience. And they bank with the majors in their core business activities. And obviously, their first call was to the majors, and the majors, dragged them for a long time. The majors looked at the project in isolation and said, that stacks up, a good project. But, that old situation where it doesn't tick the box because the majority partner had no experience in property development. So
Yeah.
this, great transaction. I won't say right for the picking because that sounds a bit opportunistic. It wasn't that. We saw the merit in it, and we went hard. We went hard. It's about a $48 million lend. It came out of the ground. They got a cracking builder, really good builder, which they surround themselves with good people.
Yeah.
So that's that ticked a lot of boxes. And we thought, look, this is too good to let it go. We like it. It's a big one at 48 mil, but and the LVRs, it was at 66%, so no concessions there on the LVR, but reasonable pre-sales. They had back then about 70% worth of debt coverage. But we liked it. We liked the transaction, and that's proceeded well. It's probably two months from completion. I was out there earlier this week, just putting in the finishing touches, laying the carpet. So it's ticking along nicely. But that was a situation where, I guess, case in point, large loan, large project, majority partner, no experience. So we were comfortable with it.
Yeah.
We put measures in place, but went ahead and did it.
Yeah. No, that's good. That's something that I've noticed also in some deals that I have submitted to you guys, is that it is true that if you guys like a deal, you're very competitive,
Oh,
right?
thank you.
You
Appreciate
know,
that. It is a
yeah,
competitive space.
yeah. No, that's like I'm particularly thinking about, there was a deal, I don't know, a couple of months ago or something that I put to you guys, and because of the client had was sort of a new client, and frequently one of the
Okay.
things that happens is they want you to shop the deal widely
Of
to
course, yeah, yeah,
make sure that I am being honest with them, that I don't have a backdoor deal with somebody, and which is fine.
yeah.
And so I did, and you guys were really, really one of the top two or three guys in there, and there were other
Thank you. I
advantages you
appreciate
guys
the feedback.
brought, but given how widely it was shopped, that was a significant statement that you guys were
It was
so.
a good deal. It was a good deal.
Yeah,
Appreciate
exactly.
that.
So, all right. So tell me a little bit with the upheaval in the market because of COVID-19 and all the
Yeah,
things that are happening there. We've seen a tremendous amount of capital leave the market.
yeah.
And so it really is a situation now that clients are really looking for who's actually out there lending. So that's kind of my
Mm.
first question is, what are you guys doing during the pandemic? Are you still lending? And if so, have you changed your criteria in some way?
I guess when it first kicked in, there was that, the I wouldn't say the shock and horror, but that stunned silence of, wow, what's happening, what's unfolding here. We saw equity markets drop, 30-40%. So a lot of our investors, and we're wholesale fund managers, so we're dealing with the high net worths, with the institutions, with the family offices. They, on paper, they've seen their position drop 25, 30, 40% overnight in the equity space. So there were a lot of people sort of in a sense of shock, if you like. And we thought, right, we've got to just take a pause here. We've got to see what is the new norm. We can't, it'd be irresponsible of us to go out looking for transactions and pretending, look, the world's normal. Let's just continue on. This is a great deal. Let's just fund it. Had to be more sensitive. The money that I'm lending, by the way, is not only investors, but it's our principals' money. It's our employees' money as
Yeah.
well. We put money into each deal. So, hand on heart, we had to go into the office and look our investors, employees in the eyes and be really sure of transactions if we wanted to go into them, or just have a bit of a pause. And we thought, look, let's have a pause, wait till the dust settles a bit. We're still seeing good opportunities. We're working with the investors that we've got. We keep them obviously informed of the various projects. We're working with the borrowers we've got to just assure them, look, things are okay. We'll continue to fund. We're seeing this through, but we're still keeping an eye out for transactions. Probably not at the 48, 40 mil mark CT. It's probably in this market at the moment. We're probably around the $6 million to sort of $20 million range. We just take a bit of pause. The new landscape, we all hope that it gets resolved quickly and that obviously health comes first and foremost. But we're aware there is capital there. We've got retirees' money. They need to earn income from that. So we're aware there is still demand for returns. So we're looking at transactions. We're not jumping out of our seats to pin them down, but yeah, definitely looking for opportunities in that sort of that 6 to 20 mil space. We like some residual stock transactions. We're probably traditionally we're 80% towards construction, 20% non-construction. current market, we're probably 60% construction, 40% non-construction.
Yep.
Just because obviously that construction time frame, investors are still just a bit jumpy about what can happen. Will there be a shutdown on site? Are there other impacts? Getting building materials out of China, is that going to delay things? So we're open for business. Look, we're open for business, but we're not as prolific. We'll just sit, we'll observe, but if there's a good one there, we'll go hard.
Yeah. That's a pretty common response that I'm getting from the other, if I can call it the more professional groups who are there. So the groups who are sort of set up as that's their whole business is non-bank lending. I mean, sometimes you get like a family office or something like that, and they jump in and out of things
Yes.
opportunistically.
Yeah.
And those guys have really pulled out substantially.
Yeah.
But kind of the actual established non-bank lenders, most of them, that's kind of what I hear from them is we're still open for business. We are taking a more conservative approach. We do have smaller ticket sizes, although occasionally I have one who went the opposite direction and said, we will only do the large transactions. And sort of their logic is because people who do larger transactions tend to have bigger balance sheets and they're more.
That is true. That is true.
So, but what you guys are saying is sort of, in line with what most of the market I see doing as well. So.
Yeah. We're still looking for opportunities, not just in the debt space. We run industrial unlisted industrial funds. We've got commercial funds as well. So we look at office buildings, we look at industrial. So the beauty is we're across the real estate sector. We're across the capital stack. We're not just senior debt. If there's a nice transaction there that needs a bit of mezz, we're happy to look at that as well. So we're in the market. We're constantly looking for transactions.
One of the things that you just mentioned, which I find interesting because it is an area where I've gotten a diversity of responses, is in improved land or in residual stock. And it's interesting because a couple of the guys who I talked to, they said we're completely out. And the logic that they applied is they said, if somebody was having problems selling it before, then they're really going to be having problems now. And it probably indicates that there's some flaw. We would rather be in the construction space where we can control more. We have greater control over it. And I've had other people say the opposite thing, say, the construction side of it is riskier. There's many more risk factors in it than a completed product. I'd rather stick with that. So it's interesting to see the different reactions people are having there.
Yeah, look, that's so true. I mean, construction was very, very popular in Sydney probably three to 4 years ago. It was booming. We had a lot of foreign buyers, and obviously that was clamped down. Then we had, issues in the quality of construction. We had a lot of concern about the towers with cracks in them and people having to be evacuated. So all of a sudden, construction was every building must be like that. And so there's sort of an education piece that no, it's not. It's very, very limited situations. And then, yes, we had the saturation. We had a lot of empty units and they're clearly not selling, so they've got to be heavily discounted. So we really have had that shift. But, it comes down to, I guess, each opportunity, look at it independently. If there is a good residual stock opportunity that meets the basic parameters, good location, fair price point, good demographic, transport, employment, amenities, that ticks a lot of the fundamentals. And if it's priced right, and we'll factor in, we'll sit down with the client and say, look, be realistic. We don't think this will clear in 12 months. Let's push it out. Let's go 18 to 24 months. If we've got no activity after 6 months, let's sit down and see what we can do to activate a bit more demand. Is there something we need to do on the marketing side, etc.? But we stay in touch with our clients. We don't just sort of let them flounder.
If you take a longer term view, I have to say that to me, the economic rationale of the longer term view is very hard to avoid from the standpoint that it's 325 to 350,000 Australians need new homes every year, right? And so it's sometimes it's easy to get caught up in what's going on in the moment and say, oh my gosh, property prices have dropped nominally 30 to 50% in the past 2 months, and okay, but is that really going to persist? Do we really believe people are going to stop buying units? That's sort of harder to make a case.
It's so interesting, watching that social dynamic. You've got clients who might drop 30% of their share portfolio overnight, but God forbid the value of their home, that they will not accept that it might have dropped 5%. No way, and yet they'll cop 30% on their stocks. It's interesting, people's mindset towards the different asset classes. It really is. But I agree. The fundamentals of Sydney. It's a great city. Australia is God's country. We're privileged to be here. I can't see migration stopping. I think we need that to feed the machine and to grow the society. There will be demand going forward. It's just we are in a situation now where people are just numb. I guess they're waiting to see where's the finish line, when's it going to end.
Sure.
We're hopeful sooner rather than later, and business probably won't get back to normal for a while, but there'll be pent up demand. Yeah. There'll be big sighs of relief.
Yeah, no, I think you're right about that. So tell me, with Centennial, are there any types of deals that are absolute no-goes for you guys? It's just no way we want to do it.
Yeah, we're not your specialized lender. We don't do agribusiness. We're not aquaculture. That's not us. We don't have that skill set. Plenty of good people out there who can cover that off. Do we go too regional? We like Wollongong. We like areas in Newcastle. Again, price point, demographic, etc. It's got to be compelling. But if we're looking at a mining site in Newman, or it's not us. Again, we stick to our knitting. We're just a bit risk averse when it comes to regional areas, sure. And there are people that do it better than us. So that's something we probably avoid and specialize as. We'll look at service stations, but if it's a school, or it's probably not for us. Not for us.
Fair enough. So have you guys settled any deals since the pandemic hit? And if, or maybe another way to ask is, what kind of deals do you see getting settled?
In this market, the kind of deals we're seeing get settled are the ones, again, that have a good reason to be settled. We're seeing situations where if people have negotiated purchase of property, they're now trying to extend the contract terms a little. We're getting clients that looking at construction, they wanted to get going quickly, now having a bit of a rethink about that strategy, putting on hold. So we've dipped our toe in a few transactions. We've looked at a couple of boarding houses, great counterparties, compelling product. It makes sense, but right at this point, it's probably not the best idea to just start it in this environment. So we're all taking a bit of a pause, and we're certainly looking to fund it, or look to transact, towards the middle of the year, or get back into the market on those kind of transactions in the middle of the year. So we're tentatively looking at a few transactions, but we haven't settled anything since the pandemic started. Yeah, and that's more by virtue of, I guess, being respectful to the investors, just being mindful that, hey, these guys have, they're sensitive, they've lost a fair bit of value. They just want to preserve their cash, get their bearings, and then we'll approach them again with these deals. We still like those deals, though.
Okay. So what advice would you give to developers who are seeking funding from Centennial? So, I bring you deals on some kind of regular basis. So what makes it easy for you to say yes to me? That's my real question.
We say yes to all of your CT. Well, obviously, we look for good deals, quality deals. All the players in our sector, you always want quality in your portfolio. But advice to developers or borrowers in this market are appreciate the opportunity cost of a non-bank lender like Centennial. Yep. We can't compete with the banks in terms of pricing.
Yep.
But what we can deliver is turnaround. We'll give you, response for a flat structure. We can present to credit. We typically do that over a weekend, or whenever we can do it. We'll squeeze it in. We'll turn around a credit in a couple of weeks. You'll know where you stand quickly with us. Whereas with a bank, you're getting a fine rate, but you might not know for 6 months. And in that time, they want you to revalue the property again. But you've already had one valuation now. Oh, let's revalue. So you've lost 6 months, and the market's moved, it's moved a lot. Plus they'll say, oh, look, we like the deal, but you know what? Let's go for 120% debt coverage on those pre-sales, and you've lost time, you've paid more holding costs, you've had to sell more. And most developers, you get a premium. When your buyer walks through the property, it's completed, feels and touches, and it's built well, they can see it's solid. you're likely, it's probably an easier sell at a better rate than having to pre-sell, particularly when people are nervous. Particularly in a market like this, it's tough getting pre-sales. Yeah, the project, it's not going to be completed for close to 2 years. So a lot of developers want to get going, and a lot of buyers want to buy a product that they can see and feel. And that's where we deliver. It'll cost you a little bit more, but you'll get certainty, and you won't have a long wait.
I'll tell you what's interesting about that is that deal that we were talking about
Yeah,
that you guys had liked so much. What ended up happening with that one, the reason the guy came to me was he had been dealing with one of the big four, and he had been screwed around by them
yeah,
for more than 6 months. And he still had something in there, and he had a broker who was saying, it's coming, it's coming. And he said, look, I'm just losing patience. I just don't believe it. And I said, I got to tell you, man, I got to, I bet you a beer, they're not going to settle. If they haven't settled in 6 bloody months, they're not settling
yeah,
the transaction.
yeah,
But they did.
yeah.
In the end, they did, but it took them bloody 8 months to do it.
Wow.
And he was very apologetic about it. He said, I at the time that I engaged you, I thought that
Yeah,
it wouldn't get there, and I was very happy with the response that I got from everybody and whatever. He said,
yeah,
but at the end of the day, they did come through, and they come in at
yeah,
a much lower rate. And I said, we all understand that. It just surprises me that they did. On the other hand, I'll tell you another story, which is I had a guy who we had a very similar situation. He was able to get one of the big four over the line for settling the land, but he immediately came, and I had written it off of my board, this is a deal
yeah,
that's gone away and whatever. And he came back to me and said, I think I'd actually rather go forward with the non-banks for the construction piece of it, because like I already see that it's going to be
Oh,
months, if ever, that I get this
onerous.
out of them.
Mm.
And they're going to things like 120% debt cover and all that kind of stuff.
Yeah,
So it's really
yeah,
interesting. He has taken the view that even though it is a higher interest rate and whatever, I'm willing
yeah.
to pay for the service that I get out of guys like
Exactly,
you.
exactly, and that's the education piece, and that's why the good brokers like yourself, CT, that you educate your client that it's just not about that interest rate. Yeah, it's obviously everyone wants the cheapest money they can get their hands on, but it's the ease of the process, and it's the collaboration. Being able to trust your lender is key. You're in it together for the long
Yeah,
term.
yeah,
It's
really
it's
are.
got there's a lot at stake. It's got to work for both parties. Everyone wants to know where they stand at the end of the day with their funder, particularly with their funder.
Yeah, absolutely. Well, is there anything else you'd like to cover before we go? It's been really good. You've given us a lot of good information about
Yeah,
Centennial and
yes.
also the things that you do, some good
I hope
examples.
it's not a curly one, but you've been in the market, the non-banks, you know the banks. What are the three key points that you look for from what makes a good lender?
So I would say the first thing is people who are, or groups that are straightforward about what their criteria is. I think one of the things you and I had talked about before is, it's a common thing that when you ask somebody, what are you guys good at? And they say, we're good at everything. And I just, bullshit. You're not. Like, we're
Yeah,
not all good at everything, right? You're
yeah,
going to be better at some things than other. And just tell me what that is, because
yeah,
that'll save us all a lot of time. So
yes,
that's really, really key. The second thing that's really key is quick turnaround. So there's a couple of groups that I deal with that nominally they seem good on paper, but Lord love a duck, I just cannot get responses out of them, in any kind of timely thing. And it's just,
yeah,
I'm like, man, that is not what people come to a non-bank for. They want, on the other hand, I have lots of guys like you who you'll turn it around in 24 hours, or sometimes it's less than 24 hours. That you'll give me at least an indicative about what's going on. And that's really, really useful. That's really
terrific. Thank
helpful.
you.
So that's the second thing. And the third thing I have to say is surety, is settling your transactions. So nothing is worse, and nothing, me and everybody I know who's sort of in the business of referring deals to non-banks, nothing makes us cross somebody off the list faster than getting a deal all the way to settlement, and then having the lender say, oh, hang on, we don't have the funds right now. It'll be next week or
Mm,
2 weeks. No,
mm,
that is not how this game works.
yeah,
So
yeah,
those are the three things that I think are probably most useful to the you know, to the developers in terms of a loan.
Thanks for sharing. Thank you.
Yeah. So,
Excellent.
all right, Mark Zukerman, thank you so much for joining us. I really appreciate it.
It's been a pleasure. Thank you. Thank you for the opportunity. Really appreciate it. Thank you.
No worries. You take care.
Cheers.